Hello there. This is James, and you're watching OneRoyal, and it's live. In today's program, I want to actually have a little look at some recent US economic data and whether or not it's giving us indications that this tariff war, trade war, is really beginning to make an impact. And that's the question. Is that the case? And what potentially does the future hold? As well as that, China sort of suggests that they could be friends with the US, and Apple has a slight warning. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should it be taken as financial advice. I always suggest you do your own research, do your due diligence, and of course, the risks at hand before entering any trade. With that out of the way, let's get started. So, as we mentioned in the previous video, we did have US GDP announced on Wednesday. And as we all know, the GDP contracted for the first time in 3 years, because it was announced at negative 0.3% versus plus 0.4% expected. Of course, when Trump was asked about this, he said, this is the funny thing. This is quite a funny thing. Trump said, oh, that's Biden's fault. It's all to do with Biden. I've only taken over since January. It's nothing to do with me. It's all to do with Biden. Okay. And like he also said, this is the funny thing. He said sometimes that, the boost in the stock market in November when he won, or when the market was rising, it's all down because of him. But when things are bad, it's all because of the previous administration. It's just strange, isn't it? I mean, if we then also look at, GDP over the last couple of quarters, and don't forget, this is the first time it's been down since the first quarter of 2022. Now, analysts say this decline is all down to the fact that a lot of manufacturers, or lots of retailers, should I say, have been rushing out to buy imports and goods to avoid Trump's tariffs. So this is what the decline was all about. People rushing out to buy inventories or stock up their inventory, so to speak. So it's nothing to do with Biden at all. It is to do with the tariffs. Now, like I say, this, it's the first negative quarter since the first quarter of 2022. So already there is signs that this tariff/trade war is having an impact, not only on the market, as we've seen in April, because April, as last video we discussed, was one of the most craziest months I've ever witnessed. But we're now seeing it actually impact economic data. However, is it though? Are we seeing the signs yet? And let me ask you this question. I want to ask it to you, and I want you to share with me your opinion. Non-farm payroll comes in slightly better than expected. NFP was actually announced at 177,000 new jobs created versus 138,000 jobs expected. Now, don't forget the ADP, which is different, is private payroll, which released again on Wednesday. It came in at 62,000 versus 113,000 expected, so a lot lower. So people were anticipating, not that I ever see the correlation between the NFP and the ADP at all. A lot of people were expecting for the NFP to come in lower, but came in better than expected. However, this again, I'm asking this question to you, good people. I want you to share with me your opinions about this as well. Though this is obviously a good sign that the labor market is really holding steady for the time being. Surrounded by clouds of uncertainty. Let me ask this question. I want you to share with me your opinions on this, because I'm beginning to think, if we look through it a bit closely, there is signs that maybe, even though on the face of it, the labor market isn't that steady after all. Because the previous number, don't forget, we did a watch along last month on this. The previous number came in a lot higher than expected, at 228,000. That number has since been revised down to 185,000. And in fact, if we look over the last couple of readings, January was revised down to 125,000. February was revised down to 117,000 from 151,000. So we are beginning to see, though it's still a good number, it's still impressive, we are beginning to see some cracks in the system. Yes, excuse me, sorry, a little sip of coffee needed. Yes, unemployment stayed at 4.2 as anticipated. But we are beginning to see, potentially, if you look through it, maybe there is indications that we are beginning to see the tariff effect on the job market. On face value, no, happy days, everything is good. But you look between the lines, maybe we're beginning to see it. And here's the other thing as well. Average earnings month on month was announced lower than expected at 0.2% versus 0.3% expected. So the question is, of course, being asked now, are hours being cut? Are companies cutting hours? Because don't forget, there was reports truck drivers are not being needed as much because there's no goods, because of obviously this trade war with China, there's no goods to be delivered. So are we beginning to see the implications, not on face value, but in the finer detail? But anyway, for now, obviously, the market is taking this as good news, because there is no doubt, as we can see in this little chart here, that the labor market is currently holding steady, certainly in this world of mass uncertainty. Whether May, it's May now, it's a new month, whether May will bring all the drama that April brought, only time will tell. Before I look at the markets, I want to talk about another story as well, which again has given the market today a little bit of hope. Because China says it opens the door to trade talks. Don't forget, over the last couple of weeks, and we've done lots of broadcasts about this, we've spoken about this a lot. The US has been saying they've been talking to China. Beijing says, no, we haven't been talking to the US about sorting out this trade war, this tariff conflict, so to speak. But there is rumors that quietly China are reducing some tariffs of their own against some of US goods. And they've also made a statement basically saying they're open to trade talks. I mean, this really looked like a case of yesterday's one party saying, yes, we're talking, one party was saying no, and then both of them seeing to play hard to get who was going to be the first one to blink and make the first move. But at least China has come out and said they're open to talks. However, before we get out the bunting and celebrate, the market is, feeling good because of it at the moment. This is what China actually said in their statement. This comes from the Commerce Ministry. If we fight, we will fight to the end. If we talk, the door is open. The tariff war and trade war was unilaterally initiated by the United States. They went on to say this in their statement. If the United States want to talk, it should show its sincerity and be prepared to correct its wrong practices and cancel the unilateral tariffs. So basically, what that sort of statement, well, I take that from the statement, it is an acceptance that both sides are hurting. Like we said in yesterday's broadcast, apparently the US is only weeks away from having empty shelves. China is obviously struggling because the US is obviously the world's biggest consumer of goods and their goods, so they need to get on board. So this is the first sign of saying that they are open to the idea of talking and open the door to try and sort this trade war out. They are putting in their own conditions, so they're not completely backing down, but they are suggesting that they're open to talking and getting it moving to try and put an end to it. But they do need the US to make some concessions. Anyway, let's have a quick look on the market, how the market's reacted, because obviously it's a very, positive job number, but also this idea that China may be ready to start negotiating with the US. Let's bring them up now. Okay, so obviously this is the S&P. The market has just opened about 12 minutes ago. And as you can see, there is a little bit of hope, a little bit of light at the end of the tunnel because of this Chinese statement. Currently open, indeed, with a gap. In fact, it looks like indeed the S&P could potentially close with the 9th day of gains, which, by the way, is a bit of a record as well for the S&P. Bear in mind the disaster or the pressure it's been under over the last couple of weeks. We're basically starting from Liberation Day, so this is indeed a positive sign. Currently trading at 5,662 points. If we have a look at the dollar index as well, again, it's got a little bit of a boost from obviously China's statement and a little ray of hope. Same if we look at the Dow as well. Again, slightly higher, up 1.27%, up 523 points today. So again, there is a little bit of positivity, A, for China, and B, because I say, on paper, that job number is good. And let's have a look at currencies as well while we're at it. And we'll look at the Mag 7 in a minute because there's another story I want to talk about. Euro, okay, obviously initially reacted on that NFP number, got strength, but it's since recovered. So we got a little bit of risk on. So the dollar is still pretty weak at the moment, currently trading 113. The same with the cable. The cable is also up. British pound, US dollar as well. So actually stronger. Key potential interest there, though, around 133.26.1. And we can see the same with the dollar yen as well. Again, initially we had dollar strength, but since then the dollar still remains a little bit weak. We can see this as well with the dollar index. Again, still around 99.47 there. Before I look at the Mag 7, which I often do, and will actually, before we do that, I just remembered it's my broadcast. And what's the one thing we talk about in my broadcast all the time? Gold, obviously. Gold is actually set for a week of losses this week because obviously we've had optimism this week, and it's weak in its safe haven appeal, but it's still trading above the $3,000 level, still currently trading at $3,247 an ounce. And if we look at a bigger picture, look at on the daily as well, it's still maintaining that slight bullish bias that it's got. again, like I said, I wouldn't really think the bullish run is over till it hits around potential area of interest, $3,100. But for now, it's still, bad week, but still holding its own. So it's not over for the yellow metal quite yet. Now, there is one more story I want to talk about. There is another story I want to talk about. And that is basically Apple. Because Apple released its earnings yesterday. And though its earnings, were announced, overall earnings, that is, China sales were slightly down, but overall revenue was announced higher at 46.8 billion versus 45.6 billion. They did have a warning for the future, because don't forget, like I said yesterday, the day before when we were talking about earnings, it's not just the numbers on the paper the market looks at. They look at the forecast, obviously, as well. And Apple, like I say, they could face a hit of 900 million due to Trump's tariffs. Now, there is signs that they might be moving a lot of their parts or getting their parts from India instead of China, moving the majority of their manufacturing to India to try and avoid these tariffs. But they have said they are likely to face a hit of 900 million due to these tariffs as well. So that's, put them under a little bit of pressure as well. And we'll look at the Max 7 in a minute. And like I say, despite the slightly better revenue, it still has hit them quite hard because of the future forecast. And we'll go back and now look at the Max 7 as well now. So let's have a look at them. Starting off with Apple. For the day, on that little hint of forward guidance, they're actually down currently, negative 4.65%. And as you can see, they've opened with a gap. So despite the equity market and the treasury market all doing pretty well on that robust job number and that hope of China, Apple is under pressure today at the moment, 4.81%. And we can see that Tesla's holding, it's not too bad. Tesla's holding its old. Meta, totally unrelated, because Meta, don't forget, had a very good earnings the other day. Microsoft as well, very good with their services, but it's Apple. Amazon, their earnings as well, they did some forward guidance as well, which said they're worried about supply lines in the future, which is giving them negative. Nvidia in the positives today, and Alphabet in the positive. But really, the story is the fact that Apple did pre-warn everybody, saying they're likely to take a $900 million hit because of tariffs. Anyway, like I said yesterday, the day before, April was a hell of a month. One of the craziest months I've ever witnessed in this industry, And now we're beginning May. So we need to see what May brings us. And it all starts next week. Could we have a really big week ahead of us? Because next week we have US ISM services PMI, EU retail sales, but then we have the Fed interest rate decision and FOMC press conference. End of the week out, of course, with the Bank of England interest rate decision. But the big one, I don't need to tell you, you know it's going to be the Fed interest rate decision. That's going to be the big one next week. And the press conference. Because the big question is, with all the drama we've had over the last couple of weeks with Trump criticizing Powell, looking at ways to potentially fire him, telling him he should lower interest rates, blaming him for the state of the market and the economy slowing down because he's not being active on interest rates. With all that criticism, and on paper, a steady labor market, which we've seen today, will Powell and the Fed stay the course and keep rates as they are? Will they start to reduce interest rates? Big question. It's going to be a big thing for the market. I mean, I feel sorry for them in many ways. If they do, many people may suggest they're doing it because they buckled under the pressure of the Trump administration. Or they might do it because they think the labor market can handle it. But maybe they're like me and they're seeing cracks in it. I don't know. But anyway, that's going to be the big event next week. Expect a lot of excitement, a lot of adventure, and a lot of movement in the market. Anyway, excuse me. Don't forget, this, of course, is a live show. So you can ask me questions anytime you like. Well, more importantly, what I really love to see is, people to share their opinions, their own opinions with me. Let me know what you think. What do you think about this case of China opening the door? Or, what do you think about the job data and the market's current reaction to it? Are you looking forward to the interest rate decision from the Fed next week as much as I am? Will Powell and the Fed actually do it? Will they cut rates? As some analysts do expect. But maybe they're cutting it for all the wrong reasons. Let me know your opinion. And don't forget, of course, if you're watching on YouTube and you like this sort of thing, by all means, subscribe if you like. Hit the notification button so you know next time I'm going live. If you like this sort of content and you put up with me, by all means, give me one of these. And the same if you're watching me on Twitter. If you like this sort of stuff and you put up with me, give us a Twitter X. Keep forgetting. I'm too old. Give us a little heart. It's nice to know that you like what we do. As well as that, and what I've noticed, a lot of people do go back and they watch the recordings. Not everybody can catch the live show, which is understandable. People are busy. But they go back and watch the recording and then watch it. By all means, if you do and you have a question or you have a comment, put it in the comments below. I will see it and I will reply to that comment next time I go live on air, which is practically every day. So every trading day, that is. So basically, we're back on air on Monday. Okie dokie. If there is no questions, not a problem. Not a problem. Leaves me to say, don't forget, these little videos are for educational purposes only, and in no way whatsoever should it be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, the risks at hand before entering any trade. Till next time, every single one of you, I've cut myself off too quickly then, every single one of you, trade safe.